everybody. Welcome back to Eggs the Podcast. Today's special guest is Nick Fogle, founder and CEO at Churnkey. Nick, welcome to the show.
Thanks for having me. Happy to be here.
Absolutely. Thrilled to death. And thanks for making the time for us.
Yeah, no worries. Can you give us a brief overview of who you are, what you do? I guess you went to college to be a lawyer and then changed your mind?
Yeah, it's an expensive mistake, expensive career change. But yeah, I went to kind of funny series of events. I went to undergrad, studied economics, was about to get a banking job. I was interviewing with Bank of America, of all places, and having dinner in September of 2008. And I think everybody knows what happened in September 2008 to banking jobs. They disappeared. So I kind of dodged a bullet there. I would have hated life as a banker. But I doubled down in education and went for the law degree, planning to be an attorney, which also turned out to be something I did not enjoy, the practice of law. So here I was, a few years out of law school, hated the practice of law, just did not fill me up. There was no creative outlet, creativity, and being able to build something was really important to me. And I didn't really identify that early on, or even think that that was a possibility to have a career where I could actually build something and have that creative outlet at the same time. So I decided not to practice law and to teach myself to code. That was not something that I necessarily set out to do, learning how to code. It was, I had a startup idea that I wanted to pursue. And here, being a naive, 25-year-old, I was trying to convince people to come work for me for free to build this app I had, the app idea I had. And nobody's going to do that. I was really naive in thinking they would for just pure equity. So I was like, okay, I'll have to learn how to write this myself and at least code something where I can get funding or I can convince somebody to come join me. And it turned out that I actually really enjoyed writing code. So I was able to kind of turn that into a software engineering internship. As a non-traditional guy, I don't have a computer science degree, and I had this little portfolio of projects I built. I got an internship and just worked my tail off at a company to prove my value, and then that turned into a full-time job, and that was kind of the catalyst to start my career in startups.
Yeah, I love that. And I love your story in general, right? Because I think a lot of the mistakes that you sort of talked about or the things that you've gone through are a similar experience to a lot of other people, right? I mean, a lot of people start school thinking they know what they want to do and end up audibling. In fact, I probably know more people who went to school for law that ended up doing something else with that education, that, rather than staying in law, and than almost any other field that I know. And so, but I will say that, law is a great foundation for a lot of things. It's like the guy that does a finance degree or whatever. There's a good foundation there. So I wouldn't say it's totally wasted, but it is interesting how many people go into law, idealistically, that's what they want to do. Even my 17-year-old is interested in doing that too. And
don't do it.
So anyway, but I think that's really great. And it's awesome too, just sort of your flexibility, how you're able to sort of pivot and move around that. So I think it might be fun to explore that a little more.
Yeah. The thing with law is a lot. I heard this, and I think the common wisdom, you still hear similar advice of like, oh, you can do anything with a law degree. And what I hadn't considered, and that was in the back of my mind, like, I don't know that I want to be an attorney. It sounded exciting on paper, but then the day-to-day, I hadn't really thought about what does the day-to-day life look like of a transactional attorney, which is what I would have done. Is transactional law. It's pretty boring for somebody like myself. Some people get a very fulfilling career out of that. I did not. But higher ed and going after a professional degree, it does kind of change the way you think. And law school is kind of like this crucible. It really compresses your thought patterns and forces you to think in a different kind of way. And I think that's helped me a lot in business. Not enough for that opportunity cost of 3 years of additional education. And I think by the end of the day, I taken out like $150K in student loans, which negative amortized when I was just doing the minimum payment. So it grew to be like $246,000 at the peak. Paying that off, that was something that was a whole separate side story that we can get into if you want. But overall, I'm able to take a lot of that and apply it to business, and particularly with like our current company where we're doing a lot of work going through procurement and navigating issues with legal teams. It's an asset for sure.
So I love your story because I'm kind of guilty of doing the same thing. I'm in the process right now of trying to build an authentication system for an app that I'm working on. So I'm really interested on the app that you decided to, you had the idea and then you went down the process of figuring out how to get it done. Um, can you tell us about the app, and can you tell us about your learning process behind learning how to code, and maybe some pitfalls and some things you learned in those first early years that someone like me can avoid?
Yeah, man, where do I start? Well, I'll tell you about the app first, like the idea behind it. Going through law school, you waste all this time you doing the Socratic method of learning, which is a really inefficient way to actually learn these dense volumes of material. And you don't really need that. I mean, it's not you end up finishing law school and then you have to pay for a bar prep course to like study for the bar exam. And there was a lot of inefficiency in that experience initially that I was like, man, law school should be much easier because the concepts aren't that hard. It's just the way you have to go through and think about these problems, that it's just not efficient. So I bought this domain name. It was called See the Law, like a visual way of learning law. Most people are visual learners. And instead of reading 800 page casebook of constitutional law, what if you could represent that pictographically or with visuals? And then, a lot of law too. Another thing that's interesting that applied more to code is that if you're writing code, a lot of code is conditional statements. If this, then this, and it can get really complex. And law is essentially that. If you look at statutes, it's like, if you meet this and this and this and this, then you meet the criteria, under the law. And to me, as I started programming, I was like, oh, wow, like, code and law aren't that different. Granted, it's in a different language, and there are different paradigms and you have to think differently about it. But that's kind of really what made it, I wouldn't say it was easy to learn to code, but coming from that background where you have to force yourself to learn these vast, quantities of knowledge. And now moving to code, it was like, oh, well, I'm going to build something. I'm going to learn what I need to build this thing. It was pretty cool because it was like, well, you can get immediate feedback on what you're learning through what you're building. So that was the long story of that transition from like thinking about legal problems to programming problems. Now, the funny thing is, being naive, first startup, I had no idea what it would take to build this vision. And my vision was much more ambitious than what I was able to build, without a budget. I was actually driving a shuttle at a resort to make ends meet while I was trying to get this idea off the ground. I told my wife, we were newly married, and I was like, hey, trust me, like, give me 3 months. I'm going to figure this out. I'm going to get investors. I'm going to find a path forward. And then by the 6-month period, she said, all right, you got to get a job that's going to pay more. You got this debt. She super supportive of the process. I think most women would have walked right out when, I'm not going to be a lawyer anymore. When that conversation came up. But then by month 9, it was like, okay, this is really clear. I don't have something that people are willing to pay for yet. I need to just get a job, and I'll continue to work on this on the side and learn. So that was the full arc of that story, was like, oh, what was initially just a means to an end, like this skill set of programming I needed to build this, actually became a really valuable skill set that I enjoyed. And I could apply that to jobs that commanded a pretty high premium.
What tech stack did you end up using, and why?
Yeah, I mean, initially I'd started with PHP because I'd done some WordPress work before, and that's all WordPress is all PHP. And pretty quickly I realized there were limitations to that, so I moved into JavaScript. This was around the time that like backend JavaScript was a new thing, so I just went headfirst into learning everything I could about JavaScript and could build like the full app, front end and back end. And there were some of these mobile app frameworks that were coming out around the same time where you could use JavaScript to actually build a native app.
Yeah, it's always interesting to figure out the thought process behind why someone went with Python or why someone went with JavaScript, and the time frame has a lot to do with it. Just the tech that was available at the time really determines what you're going to build it out of, and then you have to kind of go with it and stick with it because that's what it is.
Yeah. So. Yeah. There's a guy, I'll use him as an example because my belief is that you can really just use whatever you're best at. Like if you're great at Python, you could probably make Python work. If you're great at Java, you can use that. If you're great at, some of these other languages, you could use Ruby, you could use that. There's a guy, Peter Levels, who's made kind of a name for himself because he's a solo one-man SaaS shop, and he's launched tons of these apps that are all making, probably, well, together he's probably making a couple million a year between these apps. And it's like, how do you do it? And he's like, well, I just use Python and jQuery, which are, people are like, why would you use these old things? And he's like, well, that's what I know best. So in terms of being scrappy and efficient, you can get a lot out of, whatever that is that you know the best.
Yeah. So let's talk a little bit more about sort of your process. I mean, obviously See the Law was sort of your first foray into entrepreneurship, building an app and going to market with a product, some of that stuff. So can we talk about just sort of, the process of that and then how it sort of moved you into what you're doing today? And I know there's a lot in between there. So, feel free to land on any of those highlights that make sense.
Yeah, we'll just move through the highlights fast and we can jump back as needed. So See the Law was like, this is probably not going to work out. I still kind of tinkered around with some legal tech ideas during that time. Man, it would have been nice for AI to have existed back then, because now it's so much easier to write code if you lack the knowledge. And then like the things you can do with AI for legal problems, it's just amazing. I think a lot of lawyers are going to be out of jobs in the next 10 years. Well, and so programmers too.
The funny thing is like you just mentioned that, and the first use case that I had for ChatGPT was a cease and assist letter. That someone was using my logo on YouTube, and one of my friends said, hey, go to ChatGPT and have them write a legal sounding letter. And it worked. They got the letter and they pulled the logo down off of YouTube. And then just last week, Ryan was like, I don't know what you were essentially trying to get, but you built almost a whole website out of, was it Clark?
The website Claude. I was using Claude and ChatGPT. I find each of them have their own strengths, but I really like Claude for programming. And so I was using Claude, and I built, basically the front end and back end of a JavaScript site, launched server, did all, started writing APIs, all this stuff with zero experience ever having done any of that.
It's pretty incredible.
It's incredible.
This time that we live in. And, I think being able to write code, 50 years ago, if I had an idea, it would have been so much harder to actually bring that to fruition. And code was the force multiplier that I stumbled upon, where it was like, wow, like I can multiply my ability to do something 1,000-fold by writing a few lines of code. And I think we're entering a new paradigm now with AI, where it's like whatever creative idea you have, like you suddenly have not just code that you can run, but you have assistants writing that code and achieving the creative objectives. Yep. But kind of back to that art, I realized at the time, well, I'm not going to be able to get this thing off the ground. See the Law. It was a fun project to work on, but I couldn't monetize it. Was not at a point where I could raise venture funding. So I was kind of riding the cubicle job, writing code, honing my craft, getting better at being a developer, and kind of rose through the ranks at the software company I was at. And I was constantly working on side projects, just had that thirst. I also knew I had mounting student debt, and the only way I could possibly conceive of paying that down was to start a company that would eventually exit or that could pay me a lot of money so that I could then pay down that debt. So I continued working on, various different entrepreneurial ideas. And then I partnered up with a colleague who had been at Blackbaud, the company I was at. And we had this idea. We love podcasting. This was 2016. Serial, the big podcast had just come out. We're going to get really meta because this was like a whole podcasting app that we built. We're on a podcast, which is fun. But our initial vision was we wanted to have something where you could talk in real time to others in the community. So if you listen to a podcast or if you had a radio show and you wanted to engage directly with the host in the native medium, which is audio, how would you do that? Well, fast forward, to where we are today, that's like essentially Twitter Spaces, where you have a community, but we were trying to build that in 2016. And I spent 18 months just going ham on weekends, nights, building out this full platform. We had I built a iOS app, I built an Android app. We had all of these different podcasts on it. We had ESPN radio shows on it. We couldn't get anybody to pay us. They said, this is fun. This is a nice tool. It was more of a toy. And 2017, we were about to just spin down the company because I can't justify spending any more time on something that isn't going to yield anything. But as kind of a Hail Mary, we'd come upon this problem where we wanted to get more people into the app. And we had all of this really great content from people engaging, and we wanted to share that on social. But in 2017, audio did not share very well on social. It would give you like the little MP3 player bar. And we had this thought of, well, what if we could just make this more shareable? So I pulled an all-nighter, created this system that would actually take an audio file, translate it into various different waveforms, animation styles, and you could have like background art for the podcast. Very simple idea. Was not intending for this to be a business. It was just a way to bootstrap the audience so that then we could go raise venture funding or something for the other app. And it turned out that we got all these people reaching out. We had a little watermark on it. We had all these people reach out and say, hey, I'm not really interested in your community, but could I pay you to like make these for me? And we said, yeah, let's do it. And we really quickly started to get traction and feel the market pull us. And that's something in entrepreneurship that you know it when you see it. Like immediately it was like, oh, wow, like this thing that we built, tiny little tool, has all this market demand. And people are realizing this pain point that we had already uncovered, the fact that audio didn't share well on social media platforms. It was a massive problem. And we spent a good year. I was still very skeptical of whether this could turn into anything big, but we spent the next year growing that, building that. Eventually we grew it to be a really big business, doing well over $1 million in annual revenue. And we were able to exit that business. In the process, we had some issues in the business where very common in the podcast space, where we had like podcasters who would pay for our subscription. They'd start a podcast, but then 3 months later, they would take a break. They'd cancel. We call that churn in the industry. And depending on the type of subscription business you have, you're going to have pretty high churn. It's just part of the deal when you're doing business that's got recurring revenue. And this problem was really impacting our ability to sell this business. We talked to business brokers. They were like, hey, you're not going to get what you want for this because you have such a high churn. So we spent a long time working on ways to retain people and to keep customers longer and have healthier relationships. So when we sold that business, Wave, that same month, we launched the business I'm working on now. It's called Churnkey. That was 4 years ago. We've been working on it about 4 years now. And that's what we do now. So it's the pattern here is if you get really close to a problem space and you identify these pain points, you're probably not the only one that has this pain. And if you look out at the market and you listen to the market and you build for that, you have a hypothesis, you test it, then there's probably an opportunity there. People are willing to pay for that. And that's kind of where we landed with Churnkey and have been growing this business pretty quickly over the last couple of years.
So maybe we could dive in. Oh, sorry, Mike, go ahead.
Oh, go right ahead.
I was just going to say, maybe we could dive a little bit more into that, because it's actually what I wrote down here as you were talking, is that, you know, I sort of recognize the same pattern you did, which is your startups seem to follow this progression of not necessarily trying to build like, I don't know, some business as a money grab or something like that. Instead, they're actually trying to solve a real problem that you've encountered, you know, or you've come across it and you had the wherewithal to go, okay, this is something. And I think people come across these kind of problems all the time, but most people don't act on them. Most people don't, you know, start building a business or learn to code or whatever, right? I mean, it takes a certain kind of character to decide that they want to chase down a problem like this. So I wonder if just, you know, using your own philosophy, if you could talk a little bit about, you know, first of all, being open to identifying these kinds of issues, and then sort of how you make a decision that, you know what, this is the one to chase down, understanding you probably come across numerous problems all the time. Like where is the decision being made?
Yeah, there's something about scratching your own itch where you identify a problem, it's an issue, and it's like, man, I need to build this anyway to solve my own problem. And when you're thinking about that, it's the way I look at it is, well, is anybody else facing the same problem? And if they are, like maybe there is something beyond what the simple version that you would build for yourself. The key thing is that sometimes the market isn't big enough. Maybe it's unique to you. So before you really go crazy building this thing that might just be unique to yourself, build like the most basic possible version. Like the first version of Wave was so ugly. It was like we didn't even have a URL. Like we didn't have a domain name for the tool. It was an IP address that I'd gotten like provisioned off of AWS. We didn't have a login, so everybody could see everyone else's designs. It was so scrappy. We would send somebody a link to pay us, and then we would manually upload their artwork by committing that to GitHub. So it was such a manual process, but people were willing to wait for us to do that, and they still paid us. And I think that's when we realized, okay, we're onto something. And the same thing with churn. Go ahead.
Oh, I thought you were done talking. I'm sorry.
I'm done talking.
I was going to say I have a very similar experience. I actually, the first app idea that I was trying to develop was it was like a booking system for DJs. The contact between the clients back and forth it gets really monotonous. You're asking the same questions over and over again, and this was kind of pre Google Forms, and it was also kind of any booking platform out there was just real janky. And so my idea was to build this. I had a domain called Home for DJs, where it was going to be a booking system and a networking system for DJs. And I went through like a startup kind of incubator thing, trying to raise funding and try and make this happen. And the one thing when I actually went to actually pitch it and go in front of investors, that the feedback that I got is the market is too narrow. That the DJ community, there's not enough of them to actually build a big enough network where you can actually sell it in the end. And that really opened my eyes to the fact that it's not, yes, you can get niche, and yes, if that's what you want to do, sure, go right ahead. You could probably build a pretty good you know passive income off of something like that. But the if you are trying to raise funds and you want outside investment, it can't be so narrow. You have to be more broad. And I went ahead and changed my plan, and that's kind of what I'm working on now, is the phase 2 of that. So
Yeah.
uh, very interesting that you had the same insight.
Yeah. It's something that I think once you've had that realization, you're never going to chase like the field of dreams mentality again, where it's like this idea, oh, if I build this beautiful thing that's in my head, people will come. That's a very like Silicon Valley, Bay Area way of thinking. But the math can work out, for a venture fund that can place 50 bets and they only need one to hit. But if you're looking at your life and your lifespan and what you can reasonably get done and the risk that you take on at a personal level, that math does not work out. You probably shouldn't do that.
Yeah, I think that makes sense. And I think Mike, using Mike's experience too, and maybe you can talk about this, maybe first with Wave, or if we want to advance into talking about Churnkey. I think one of the challenges here, and I know that it's something that I've experienced. I mean, we were talking moments ago about using AI to do some programming. I was basically trying to build out an MVP website for an idea that I have. And that sort of just all these things get me thinking about, making decisions around an MVP and what actually needs to be done. I think sometimes, and also again, speaking from my own experience and my own bad habits, sometimes I'll let perfect be the enemy of good, right? So I never actually get the idea out for anyone to vet because I'm too busy building a brand for it and building all these things, and trying to make it look like this perfect polished company when in reality, we don't even know if it's going to work.
Yeah.
And so I wonder if you'd talk a little bit about just your experience across these last two companies, specifically Wave and Churnkey, in terms of, what was the, primary decision or primary problem you were trying to address, and then how did you address that in an MVP, or like where do you make decisions around what to show and what to hide?
Yeah, both of those are good examples. With Wave, it was like, we just stumbled into this problem. We were trying to solve it ourselves, and I created something that we could just use internally, so we didn't even have the domain name. And it was kind of like, what's the bare minimum that we need in order to do this? Use this promotional tool, generate videos, post it to social. It was like the ugliest thing in the world. And the painful thing is when you go to customers and say, hey, will you use this thing? Or do you need this, tool or this solution I have? You're going to have to be prepared for rejection and maybe even be a little bit embarrassed by how unpolished it is. I think that is one of the best signals you can get from the market, is if you have something that you've released, you're a little bit embarrassed of the way it is or the way it looks when it's released, yet people are still willing to use it and pay for it. I think that's a sign that you're onto something big. And that is also the point where it's like, okay, let me close, 5 to 10 accounts, see how they use it, talk to the customers, and then use the customers' feedback to inform what you need to build next.
Yeah, I think that's really good feedback. And again, just in my own experience, like with this particular thing I'm trying to build, that was kind of the idea, right? Is let's go out, let's try and get a couple businesses on board. In this case, we're catering to student athletes. So let's get a couple athletes into our system and see if what we've got sort of in manual mode works. And then if it does, then we can sort of start to scale in a more automated or technological way. But anyway, so, we're making a lot of those decisions right now. So as it went to Churnkey then, so because like with Wave, you said it was a little bit janky and you just sort of stumbled into it. It seems like Churnkey is maybe the byproduct of something you discovered in building Wave.
Yeah.
And so, which, was this notion of dealing with churn and how to deal with that. So maybe it's a good point to talk about, okay, maybe it started to look like you were going to exit Wave and you were trying to decide what's next. You had, clear brackets around a problem that needed to be addressed and you decided to move forward. How did you move from sort of, exiting Wave to starting from scratch with Churnkey?
It was hard. We had, well, first off, timeline, we started writing the first line of code for Churnkey as like a separate product in September. We had this sense that we would exit Wave eventually. It all happened really fast, where we got a bunch of inbound at the end of the year, and there was a really great partner that was going to acquire Wave. And it was kind of like, all right, well, we've been building this thing on the side. It's good enough right now. Like, we would have liked to build it a little bit further along, but it was a nice forcing function to be like, okay, well, this Wave deal is going to close. Let's go ahead and make sure we got beta customers on the next product, so we have our next thing to work on. We wanted to make sure that like this is what we're going to do next, and it wasn't just some kind of pie in the sky dream that only worked for ourselves. One thing that was a little different and kind of an eye opener here was table stakes are higher with B2B. When you are talking to a business and you're specifically, we're working with billing data. So like we need to do things right, and there's a much deeper level of trust that we need to build with organizations before they'll like connect the billing data. So that made it so like the super scrappy MVP wasn't so much of an option, but it was still a very basic version of what we had in mind. Basic authentication, all the things that you have to have. But in terms of like, marketing side, the charting and graphs and things like that, very scaled down until we started to see product market fit. One challenge, as kind of a side tangent here, was we had just grown this business. We got off the rocket ship. It had been growing like crazy. We had this amazing exit. And there was some hubris there. We were pretty confident that it's like, we've done it before, we can do it again. It's going to be ultra fast this time. We'll avoid all the mistakes. But we're moving to a totally different market. We've been working with like B2C, B2 prosumer types of markets for Wave. And now we're going pure B2B. And that was a totally different animal. It took us a lot longer to start getting the traction that we wanted. It took us about a year before we were like, oh, wow, like we can finally feel the market pulling us in this direction. So it's kind of like startups always take time, particularly when you're bootstrapped at first, which is how we've always operated. We're not just spraying and praying lots of capital to force this into the market. We're working diligently, closely with customers to build something, and then we want the market to start pulling us.
Yeah, I think that makes a lot of sense. And I wanted to ask too, and I probably should have asked before this actually, is when it comes down to the exit, for a lot of these companies that are sort of bootstrapped together, they're sort of, thrown together quickly in response to a problem you've identified or something like that. When it comes to the exit later down the road, what did you have to do to be prepared to make that exit? And maybe, over the tenure of Wave's business, you guys became pretty sophisticated business people and you developed processes and all that kinds of stuff. But, as guys who started out in law, who had limited experience in programming, who moved into this new realm, it doesn't sound like something that would be as formal as, a company that was ready for an exit. So what did you guys have to do to prepare for that? Or were there challenges around being ready to sell it at all?
Yeah, that's a great question. I think we started to prepare when we had an inbound that came from Spotify's corporate development team. Like we got an inbound and jumped on a call with Spotify. And I said, oh my gosh, we got Spotify on the line. Like they're going to acquire us. It turned out we were tiny, way too tiny to even make it worth the team's time to invest in M&A activity. But it was like, oh, like the market does have an appetite for this. And about 6 months after that, we got another inbound from a broker representing a third-party buyer. And they gave us a figure that was like, wow, that would pay off my student loans. That would maybe help me catch up a little bit on retirement. It seemed like a good value. But ultimately, we were just hitting our growth trajectory. We'd hit an inflection point. It didn't make sense to sell then. But we knew at that point from those first two inbound offers that we got, there was a good opportunity. So what we did is we started meeting with a broker to say, hey, this is kind of what we're thinking we'd like to get for the business in 1 to 2 years. How are we doing? Are we on track for that? Like, what are the things we need to be prepared for? So churn was a really big one for any company that's going to get acquired. You're going to have a value multiple. And if you have high churn, your multiple is going to decrease substantially. So that was one thing that we had to fix. Another thing was we had a lot of tech debt, and I had been the primary developer the whole time. So I had to go out and figure out, well, what could we hand off? And then what would be a nightmare for a team when we're doing due diligence? So I refactored all the code, modernized it, made it much more modular to hand off. And then there are a few other things. Financially, we started looking at the P&L more closely, making sure that we were profitable. For startups that are doing less than 2 million, less than 3 million, you're typically the value multiple is going to be based on seller discretionary earnings, called SDE, rather than like 12-month trailing revenue or profits. So it's kind of like, well, how much money do the sellers have that they are basically treating as profits and maybe even paying themselves out with? And so we were really able to optimize our spend as well in the year leading up to that so that we had maximum profits.
Can I ask what you did to alleviate the churn rate?
Yeah, two things. So there are two types of churn. One is voluntary. So that's when people click that dreaded cancel button on a website. Voluntary because somebody is making an intentional decision to stop that subscription now. The other is involuntary. Failed payments, big problem. It's actually become a bigger problem the last few years. But we focused really heavily on both of those problems. The place where we saw the biggest difference was really drilling into voluntary churn. And what we realized was if we collected feedback and started understanding why people are leaving, maybe we could build better product. We were so worried about maybe there are software bugs. Maybe we're not giving them the best customer support experience. They're having issues and then they're canceling. So we threw a survey up when they canceled. And it turned out that 5% of all cancellations were those two issues, support or technical issues. So the other 95% had other reasons. And it was, I think the most common were it doesn't fit my budget. And below that was, I'm not using it enough. And those two were solvable problems because we were okay, well, this was also during the pandemic, by the way. So budgets were a big concern. And we were what if we offered somebody a temporary discount because of COVID and say, hey, for 3 months, we'll give it to you for 50% off. And suddenly when somebody answered the survey and they, responded that it was not fitting their budget, we'd offer them something. And we started seeing, 20% of those customers we could save. And then if they weren't using the product enough, or if they were taking a break, we'd offer them the ability to pause and keep all their data, we would roll over their credits. And then we had a 30% save rate on that. So we were able to slash voluntary churn by 30 or 35% over the course of 6 to 9 months. And then the failed payments problem, getting better, getting an email sequence in place to help automate recovery of those was also a big factor. So those are the two big things we focused on. We spent a ton of time understanding this, building it out. So we knew that other teams would probably rather pay for a solution rather than doing that exercise that we did, where we had to go through and build it ourselves. It'd be much better to buy it and stay focused on building the actual software that you're delivering for your customers.
Yeah, that makes a ton of sense. One thing that I've always, the project I'm working on right now, I've integrated Cloudinary. I'm thinking about using Stripe for payment processing. There's all these third-party kind of tools out there that make it easier, but you've kind of been down this road. Is it worth it to take those shortcuts to make it easier, or should you figure out how to host images on AWS and do it yourself through Cloudflare? Or, there's so many different options out there. You kind of get in this trap where you're is it going to bite me in the end, or is it worth just taking the shortcut?
I don't even think of those as shortcuts. It's this is what you have to do, particularly early stage. You have to value your time. What's your time worth? How long is it going to take you to build a image, storing service on S3 and AWS versus a hosted solution? You can do it faster now with Sonnet or ChatGPT, but it's still going to be a big thing that you have to maintain long term. So I would say you can always do that as you're starting out. Another nice thing to know is if you've got a new product and a new business, like just go form an LLC if you don't already have one. And you can apply to get startup credits. So like AWS will give you a ton of credits. Most of these providers, they want you to be successful and use them long term. They're not trying to go for the money grab here for this tiny, bootstrap developer. So you'll have like a year of credits for a lot of these different SaaS providers. So you don't even have to really buy it. See if your product actually has legs. Use the free tier, and you can go from there.
Yeah, they seem to have pretty good free tiers. The thing that makes me nervous is if you jump in all into Cloudinary or all into Mapbox or all these different tools that are out there, is when it actually scales. Am I going to go from no bill to a $10,000 bill and not have the income coming in to that's kind of, having not been through it before, those are concerns that someone like me has. And it's interesting to hear other people's stories about that. Can you maybe talk about, hosting providers and scaling your app in the early days? Now it's not as, a lot of your solutions out there will automatically scale for you. You just have to set alerts. But did you have anything like that bite you in the butt back then?
No, one time I had a key that got leaked for AWS, and we got like a $80,000 bill because somebody was mining Ethereum or something with it. Like, that was the only thing that was a shocker. And then Amazon was like, "Oh, it's okay. Our fraud system should have detected it," and they wiped the bill clean. I know that kind of stuff happens, but from like a scaling point of view, we've definitely had systems where we're like, okay, well, we should build this ourselves, but that was at a more advanced stage, and that's not a hard thing to do. You can always migrate. Usually it's not going to take you too long. I think that's probably the way I would look at it is, hey, like, let's see if this thing even is going to be successful. And then if it is, like, make sure you've got the unit economics in place so you're making some money, and then you can justify the spend somewhere else. Or maybe it's, if you're not losing money on your infrastructure, then you can keep it going until it makes sense to hire a contractor to move off of that.
Yeah. Thank you. Appreciate that.
So I wanted to talk to you a little bit more about the transition off of Wave and into Churnkey. And one of the things that I think, and I'm making some assumptions here, so feel free to correct me if I'm wrong, is that I assume coming off of Wave, and given that there was an exit there, you were probably in a little better position financially leaving the company than you had been when you began it. And the reason I'm making that note is just as you moved into Churnkey, obviously it takes money to get an organization going. And there's a lot of different ways to do this. One version of it is where you're bootstrapping it, maybe paying it for it yourself, and you were maybe a little bit better equipped to do that after the exit from Wave. But how did you guys handle financing in Churnkey? Did you seek venture money? Did you do it yourselves? Yeah. Like how did you do it, and why?
We've been through a lot of different stages in Churnkey's history. So it's been 4 years now since we wrote the first line of code, 3.5 since we launched publicly. And during that time, my thinking around external funding has changed a good bit. Initially, we had some proceeds from the sale that we could just invest, and we didn't have to pay ourselves anything. In fact, we didn't pay ourselves for 3 years, I think, at Churnkey. But investing in contractors, things like that, just to get it up and running, mostly sweat equity, though. I mean, that was really how we were financing it. We reached a point, though, about a year in, where we were like, we don't know how to sell to other businesses, and like, we need help. And we were even considering like throwing in the towel and saying, let's go back to B2C businesses, which we've done before. We could do that. And an opportunity came up to take money from a really good accelerator that specializes in bootstrap B2B SaaS founders. It's called Tiny Seed. Rob Walling is like a very well-known podcaster. Startups for the Rest of Us is his show. And he founded this fund for companies like us. So we went through this year-long accelerator program. It was remote. Got a decent amount of capital to make some bigger bets, hired another engineer, hired a sales guy, and we started to see a lot of traction during that year. Not everything panned out the way we thought with some of those bets, but it got us to a good spot where we were almost, able to cover all of our expenses. And then after that, we kind of crossed the chasm, and we were no longer totally dogmatic about, external funding is evil. It was like, okay, well, it's a tool, and we need to use it for the right reasons. So we did a small angel round. We had enough traction at that point to put some numbers up and go get some angel investors. And we did a couple $100,000 in angel investment to just take some bigger swings and keep doubling down in the areas that were working. And then end of last year, we just happened upon a really great investor to lead our seed round. We weren't planning to raise a seed round, but we were starting to see some areas where we wanted to put more capital to work, where we could spend capital efficiently, spend $1. The idea is you want to get $2 back if you're going to put $1 out there. And we were seeing that. So we had not a traditional venture fund, more of a early growth equity fund that was aligned with kind of our vision of being capital efficient. And we closed that round back in February. So that's been the arc of external funding and kind of how we have thought about getting Churnkey off the ground.
So you mentioned that you changed your attitude on external financing, specifically maybe as it pertains to venture. What were the big, I guess, levers that switched in your mind that made venture seem more viable? Like, I mean, is it just a matter of you found the right partner this time, and in the past maybe you hadn't been so lucky? Or, I mean, was there something fundamental about venture capital that worked better this time around?
Well, I think initially we were just bitter because we tried so hard to get external funding for Wave in the early days. And these guys did, it was just like, it was pretty rude, like some of the responses we got. I'm glad that business wasn't venture scalable anyway. So I'm glad that nothing like that panned out. But I think initially there was some bitterness there, and it was this like, we can do it ourselves mentality where we have all the upside and call all of our own shots. We don't have a board controlling us. And it was kind of a gradual progression here to where we took a much larger sum of money recently. I will say that my attitude around venture hasn't changed much. The biggest difference is the current lead investor we have. They are more of like our early stage growth equity where they want the returns they're looking for are very different than venture. Venture wants to place, a traditional venture fund wants to have a portfolio of 20 to 50 bets, and one of those needs to return the fund. So that one of those needs to return the whole fund, and they want all of them on a trajectory to achieve that. And it's kind of a burn the bridges mentality where we built a great business, over a couple of years. We're not really willing to risk all of that to go for like a moonshot. We just want to build a great business. And I think that is still where we are a little misaligned with venture funds, is just that we don't necessarily want to risk everything we built to chase some moonshot idea that could or could not happen, or may not happen. So yeah, that's my thinking. It's still kind of nuanced and subject to change, but I've definitely evolved. I'm more open-minded with external funding, but still cautious.
Well, I think that's a good point right there in and of itself, which is just, being flexible to the options, right? I mean, not every business is cut out for venture. Not every business is, or maybe many businesses should be bootstrapped and should be sort of, do it on your own. So, you mentioned it like with Wave that maybe you guys weren't venture scalable anyway, and maybe you didn't know in those early days, but looking back now you can recognize that. And so maybe you could see what it was that, these venture guys were seeing or something at the time.
Yeah. Yeah.
And so,
we were
but I
pretty
think
naive.
but I think that flexibility is, I guess the point I'm trying to make is that it's, critical to just kind of be open-minded and stay open-minded and, not necessarily rule out any one modality.
This might get a little nuanced, but what did you use the money for? Did you hire more developers? Did you want to scale quicker? Was there pain points that you needed the money to accommodate?
Team will always, for SaaS companies, the team is always 80% of your budget. Within some wiggle room there, but like 70 to 80% of the budget is going to go to the payroll. And people are expensive. And one thing people don't think about is, all right, well, I'm hiring you at, $100K a year. Well, your cost as a company is probably going to be like $130K after healthcare and taxes and all that, not to mention onboarding. So, for a long time, it was just 4 of us working on Churnkey. And then we got to 6 people after the first 2 rounds of funding. And then we were just, really spread thin, a lot of product that we needed to work on, a lot of opportunity on the sales side that we saw that we needed to pursue. So it really went to expanding our engineering team and the sales team.
Yeah, that makes sense.
Oh, sorry, Ryan.
I was just agreeing.
Can you tell us about Churnkey, how it integrates and works with the numbers? And that's something that I apologize for the sirens in the background, but tell us a little more about Churnkey, how it works, how it integrates with your customers.
Yeah. So we have a direct connection to a number of different billing providers. You mentioned Stripe earlier, Mike. If you have a subscription business and you run your payments through Stripe, well, it's perfect because we can automatically integrate with Stripe. We know, which customers you have. We know, what their price points are, and our system can intelligently help you to recover both failed payments, so involuntary churn, as well as that point where somebody clicks cancel. We know everything about the customer. Some businesses will even pass us product data or usage data. So we know if somebody hadn't been using it, and we have a pretty intelligent ML and AI system to help optimize offers across. And we've got 700 connected businesses, and um, once you have a data set that's that large, it works, and we can look at the benchmark data and help to optimize things further. So nobody's leaving money on the table. You're able to offer something to keep a customer that's just enough to keep them, and you're not having to forego a ton of revenue as a business.
Are you
I know.
making API calls to Stripe, or do they have an API where you can connect to like that, or are you somehow getting the data through the transaction from the customer?
They have one of the best APIs in the world. Stripe does. It's pretty incredible. There are other good ones too. I mean, we also integrate with like Braintree. That's PayPal's version of Stripe. There's Paddle. There's ChargeBee. There are a bunch of them. Stripe has got most of the market at this time. So there, we see most business through Stripe. But yeah, it's API integration, webhooks, things like that.
Very cool.
Yeah, no, it's very cool. And it's funny, just given the time frame that you were working around, I was thinking about the thing, some of these ideas that you guys have come up with to try and conquer churn, both voluntary and involuntary, and then thinking about the timing around COVID and all that. And it does seem like there's been a rise in those kinds of offers, right? The sort of the move to, a discounted service if you try and cancel and things like that. So it's interesting to think that, the stuff that's pretty commonplace now, like you guys were really leading the charge on back then. So that's pretty interesting.
Yeah, and that was an obstacle for us when we first started because it was kind of a novel concept. I think the only ones that we'd seen was like Netflix was very early. Netflix has a team of probably 30 engineers working on that. So it wasn't like we came up with something that was totally out of the blue. It was like, oh, this is something Netflix is doing. Maybe we should look into something similar for Churnkey. And now that the market's evolved, it's a best practice. There's this phenomenon where people are just overloaded with subscriptions. You've got your Hulu, you've got your YouTube, you got like 10 different media subscriptions, and people are overwhelmed and they're constantly picking and choosing and canceling and coming back, and there's less continuity and loyalty for subscribers, particularly in B2C markets. So that's kind of a nice tailwind that we found as a business, where this is a trend that's rising, where voluntary churn is up across the board. Failed payments are also up across the board because of these new virtual debit cards people have, where you've got a limit. There are more chargebacks. There's more fraud. So there are all these new systems that are causing payments to fail at a higher rate. So we're seeing a lot of success there as well.
Yeah, no, it makes sense. And it's interesting just thinking about how things are evolving. It makes a lot of sense. So one last topic I wanted to get into, and it might feel like it's a little bit out of left field, but you sort of talked about it early on, but just from doing some research on you, I know that you have some perspective on this. So for a lot of people who listen to this show, I mean, they're entrepreneurs themselves, or maybe they're thinking about getting into doing a business or starting a venture of their own. And I wondered if you'd talk a little bit about just sort of overcoming adversity in terms of, personal life versus work life. And you mentioned early on that your wife was really supportive. I'm lucky to have one of those too, that's put up with all my sort of entrepreneurial crap over the years. And so, I'm pretty grateful for that. And if she wasn't that way, it would sure make life hard for me. And it would make, doing a lot of the things that I've done over the years that were probably a little risky or questionable, somebody probably should have stopped me. But nonetheless, I had her support and everything. But I know in your case, you had a supportive spouse, but you have had to overcome some adversity in your life. And I wondered if you just speak sort of as a person who has, founded successful businesses, managed to buy and sell companies, do all the different things that I think most entrepreneurs are looking for. Just sort of, how you were able to kind of find, I guess, internal energy to move past some of these things, or to integrate the problems in your life with, how to move forward or whatever. I guess I'm not sure that there's a straight question here, But I
Yeah.
wonder if you talk just a little bit about just sort of, being an entrepreneur and some of the struggles of, just managing your personal life alongside.
Yeah. I think pressure can be a really good thing. When like you only like you have to figure it out. It's kind of like this is a bad analogy. I'm sorry for it, but it's like if somebody put a gun to your head and they said, "Hey, I need you to like close 3 deals, by the end of the week, or else." It's like you're gonna make that happen. Like it's gonna happen. And if you didn't have that pressure, it'd be like, oh, like maybe not. But pressure can be a really powerful motivator. And I think in my own life, I had this albatross around my neck, which was this massive student loan debt. It was growing by $50 a day. I was scared to even like pull up the site to make my payments on Navient because I didn't want to see the balance. I couldn't stomach it. But there's something that comes. It's kind of like the ice bath. Like you do an ice bath and you get acclimated. And before long, you can kind of enjoy it. And like forcing yourself to constantly do hard things makes you a lot better at doing hard things. And as you build up that muscle to do hard things, you're able to take on more. And I think that's true for my own life when I was back to, driving a shuttle and, making minimum wage and just trying to make it. It was like, this isn't something I get to, I'm not just like chasing a hobby or some pipe dream. Like I have to find a way to make this work. And with Wave too, it was like, if I'm going to put time into this, we have to find a way to ensure that this can become a profitable business for us. So I think pressure is good. And the attitude you have around how you face challenges is important. Getting good at hard things and being able to say, hey, this is good. I get to face this hard thing because I've chosen this path, and hard things are going to come with it. But as you do more of that, you get really strong at being able to do it. And then the things that seemed, like really adverse situations previously, you look back, you're like, wow, that was pretty trivial. And now that the hard things I'm facing are like, oh, this is so much harder in comparison. So it's all relative. And I think for everybody who might be listening, hard things are going to be different for you than anybody else. And it's important to just start today doing that one difficult thing that you're procrastinating on, that you're deliberating doing, and just do one more hard thing tomorrow. And you keep doing that. And it's amazing when you look back 10 years and you can see how that stacks up and what you're able to achieve. There was a great quote. I forget who actually said this first, but it's that people often overestimate what they can achieve in a year and they underestimate what they can achieve in a decade. And I think that's so true for entrepreneurship because we set these like, New Year's resolutions, going to do this year. But it's really not about that. Like it's probably going to fizzle out if you're just looking at a short-term time frame. But if you're taking a decisive stance on where you want to be in a decade and you're making incremental steps to get there, you're going to have a much higher likelihood of having a really great, successful outcome. And it's so successful that you'll look back on who you were 10 years ago and you don't even recognize that person.
I love that. That's so true. You can get so much done in exactly like you said, a year goes quick, but a decade gives you time to plan and make changes and overcome and adapt. Nick, I've really enjoyed this conversation. Thank you so much for making time for us. We're kind of at that time. Do you want to tell people how they can get a hold of you, how they can try your product?
Yeah, absolutely. I'm Nick Fogle. I'm on Twitter as just Nick Fogle. Got a LinkedIn. I'm also Nick Fogle there. I'm the CEO of a company called Churnkey, which we talked about some today. That site's churnkey.co. If anybody has subscription business and just wants to talk about churn or wants to get a demo, you can come to the website and sign up right there.
Awesome. Well,
Love
thanks
it.
so much, Nick. This has been awesome. I really appreciate you taking the time to visit with us.
Yeah, this was fun. Thank you for having me.
Absolutely. Yeah. And thanks so much to everybody who tunes into the show this week and every week. And we'll see you guys next time.